There we go. I hope you can all hear me now. I hope you can all hear me now. Sorry, I was on mute that whole time. Good. Sorry about that. So let me start again. So for those who know me, my name is Caleb, here with Ken and Taroslavi. I'm sorry I was on mute that whole time. I hadn't noticed. So thank you, Raf, for telling us that. So starting this week, if I just jump straight into the charts, it's been a good week so far. I'm personally down to $50, so it's totally good with me. That's among my thresholds. So I've been having a losing streak for the past 2 weeks because of some stupid trading mistakes, which I'll show you, which next week and the following weeks to come, I'll be really rectifying that, making sure not to repeat the same mistakes. Or if I do, I notice it early and minimize it. So I had a very good trade on USD card, which I came out profitably, and then I entered some very stupid trades, which I'm going to show you. It's part of the journey, it's part of Forex trading. You always make these mistakes. Ken has made a few money, also a few mistakes here, which he'll share with you. So as I was saying, this week I'm down about to $50, so it's totally fine. I was looking for a top on gold as well as US oil, so I lost a lot of money on that. Last week I was down $100. This week I'm down about $140. So it's a 2-week losing streak, which I'll go straight to the chart and show you the mistakes I made, which is totally fine. I'm here to be very transparent on my losses as well as my wins. That's why we made this group public. So we'll be celebrating the wins together, we'll be celebrating the losses together. So I normally have a losing dance, and I always do that and stay out of the market. So if I go straight to the chart analysis, just to show you what I did. Actually, let's first go down to my account. So this is my account. So as you can see, I'm down this week $240 with a balance. I have a balance of $8,770, which is totally fine. That's about 3% of my account. So about 3%, almost 3%, not yet there, but that's the losing streak I've been having. As you can see with my losses, which I'll show you, I made a very silly trade on oil. You can see I lost about $40 over here. If I scroll up, you can get to see I also made a loss on gold over here. I lost about $160, as well as oil again. I lost another $50 over here. So that's what made me lose this week. I had a good trade on USD card. So you can see over here I was having a good winning streak on USD card. This was GBP USD. Actually, it was a good trade. This was Dow Jones. I had sold, and this was my winning streak on USD card over here, as you can see. So those are the profits I'd made, but at the end of the week, I ended up taking silly trades on gold, which I'll show you, as well as US oil. So if we go down to the chart analysis, let me show you the mistakes I made. As I keep saying, it's normally fine to make these mistakes, at least you learn from them. And I made some silly trading mistakes. So if I start with USD card, okay? So when the week started, this is USD card. Let me just put it on full screen. If you take USD card, as you can see, I'm always looking for Elliott wave analysis. So mainly when I'm analyzing the market, I normally do, I look for the trend. So I use the daily chart and the weekly chart. I mean the daily chart and the 4-hour chart to look at where the market is trending. On the weekly and monthly chart, when you get a trending market, anything can happen within. So I'm not a position trader, I'm a swing trader as well as a day trader. So I'm looking for the 4-hour and the daily chart to show me the direction of the trend. So using this daily chart, you can see we had this 1, 2, 3, 4, 5 wave on the USD card. So I had a short position at this level. If you go down to the 4-hour chart, so the market was showing me a bearish tone. So as you can see, I got a very good entry at this level. at this level. This is where I short the market, a very good entry, and I ended up coming out of the market at this level, around here. So I came out of my trades at that level. I left about 120 pips on the table. If I held on this trade this week, I'd have made about $400. So I came out of this trade because of this bullish momentum, and I was looking for a trade on oil. USD CAD and oil are very highly correlated. So I was looking for a short trade on oil. So I was expecting, if oil goes down, I was expecting this market to go up, but market had not yet bottomed. So we still had around 120 pips to the downside. So I came out of this trade. That's how I made my profit on this USD CAD. I made about, I think, $120. And now let me show you my mistakes. So let me start with gold. So gold, my main mistake, I was looking for a top, okay? So you see this region over here, at this region over here. Once market hits this top part, let's go to the daily chart. Let's stick to the 4 hour, it's much more clearer. At this level, I was looking for market to top, especially using this channel, this line. So as you can see, let me scroll that out. So we had a top at this level, so we had a spike. So this level over here, we had this bounce over here. So I was expecting market again to bounce over here, where the market currently is. So I saw that long spike on the 4 hour chart over here, and I was expecting at least market to retrace back down to, I was looking for about 1800, around this level, where the 4 is, around 1795 was my first target. Very strong bearish close over here. I entered exactly at the bottom before market turned. So I entered down here after this 4 hour close, and you can see what immediately happened. Market went all the way up. So a mistake I made with this one, I was looking for a top on commodities. Never try to look for a top on commodities. Let the commodity start reversing, and then you look for an entry after that. So that was one of the trading mistakes. This mistake cost me $150. So market continued going back up. But the worst mistake I've made this week was on oil. So oil, as you can say, last meeting on Wednesday, I remember I told people I'm very, very short on oil. So I got an entry around here. Give me a sec. So I got an entry around here during this hourly close. Then market started going in my direction and started heading back up. So I ended up closing my position after this bullish close on the 4 hour chart. So after this bullish close, I came out of my trades and market went all the way up to 42.25. That was another good entry if you go down to the hourly chart, which I don't think I'll go down for now, but this was a good entry. Then I ended up yesterday taking another short position at this level after this 4 hour close, and market spiked me out within this spike over here. So I ended up losing about, I think I've lost about another $120 on this trade. So very, very stupid. As you can see, market has gone in my direction. So these are mistakes you normally make market happen. So I'm here to tell you that mistakes will always happen. You will make mistakes. I'm feeling very bad for those mistakes, but I'm learning from them, making sure to correct them next week. So those are the trades I was looking at. I made another silly mistake on Aussie dollar, but no need to jump into that. But currently now I'm out of my trades. So currently now I'm out of my trades. I'm not having any running trade at the moment, because when you start making, Jesse Livermore says, losing begets losing. When you start losing a lot of losses, it's better you stay out of the market, look at what you're doing wrong. Basically, the market wasn't wrong according to my analysis. Maybe gold was wrong because market has gone all the way up, but US oil has really dropped. And my analysis on US oil, the backing that's looking at it, I don't do fundamental analysis, but the basic reason why I was heavily short on oil is because I was looking at the coronaviruses are still expanding. The numbers are still rising all over the world. Maybe China has stopped, but China, you know, they can always cook their books. In US, we're seeing high numbers rising. In Kenya, we're also seeing high numbers rising. So the thing is, OPEC had a meeting, and meeting, for those who do not know, OPEC is a group of people who discuss the production of oil. So the Organization Petroleum of Oil of Exporting Countries, the oil group. So they discussed the other day and decided to increase the oil production by 2 million barrels a day, around that level. So the fact is, since they want to increase oil, the pandemic hasn't yet been controlled fully. That means there's a possibility of a second lockdown. So looking at that, if there's another lockdown worldwide, what can happen is that the production of oil, if they continue increasing it and there's no supply, no demand, and the supplies a lot, I expect it to continue dropping. So that is an analysis I'm still looking at. I'll be looking maybe to short it next week once I get a better confirmation, maybe recoup the money I've lost these past 2 weeks. So I'll be very conservative moving forward next week. I won't be jumping into trades silly as I was doing this week. So that's mainly what I had for you guys. I went against my strategy, and now I've learned from it, learned from your mistakes. That's the good thing of losing. Understand that you can lose anytime, you can make losses in the market, and learn from them. So that's basically what I have for you guys. I've lost this week, I've lost last week, totally fine, to $50 down. Next week, I'll be looking to be very conservative, not jumping into trades. So I won't have many trade analysis. I'll be focusing on very few pairs like the GBP AUD, which I'm looking for that market to really rise. Aussie dollar, I'm also looking for that market to drop further next week. Oil, I'm looking for further shorts, but I'll be very cautious about that. Looking for a top is very hard. Gold has been rising all the way to 1900. We haven't had any correction since we broke 1800. So we had that sort of consolidation between 1795 and 1815. But once we broke 1815, we had that bullish close, which closed at 1820. Market has been rising all the way to 1900. So don't try to look for tops on gold. Let it stay off the market for now. I know many people who have traded it and lost money. So be very cautious on that. So with that said, I'll finish there. Ken will come and finish series analysis, what he's done this week. And then I'll come back and close the meeting. So cool, guys.
So hi guys, hope you're doing well wherever you are, wherever you're watching us from. I can see several of you have been coming in for several days. So we try and keep track of the people who are following and what you're looking at. So personally, I've made some money this week. I've made about $500. Actually started out by making about $900, but I gave back about $400 on some stupid trading errors, like Caleb is saying. And when you make trading errors, the best thing you can do is try and minimize them. We're not here to tell you that when you're trading, you can fully avoid the errors, because markets are volatile. Markets are sometimes too fast for you, and when they're too fast, you tend to do some emotional mistakes. Since we're not robots, we are humans, we make some mistakes, and since we make mistakes, we pay for them by losing money. So I'm up about $500 for the week. If I never made the mistakes, I'd actually end the week with about $1,300, which is a good amount, because the mistakes I made took me out of some trades, and the trades did very well. They moved where I expected. So for me, there are two trading errors which I think are very, very bad, and like what many people think. One of them is missing a huge opportunity. So I'd rather lose money than miss a big opportunity. That's one thing I'll always say. If a market is moving to my side, I want to be in, especially if I anticipated the move. That's one trading error. And the second trading error is making some money on a bad trade. That's also something that I think you should try and avoid, because if you keep on repeating the two errors that I talked about, you will lose more money than you can imagine. So what I'll do is I'll first go through the trades that made me money, then I'll go through the errors that I made, and I look at the markets now that I'm watching. So I'll do it in 3 stages. Stage 1, I'll look at the trades that I made, which are winning trades. So I'll just do a recap. Most of these trades were taken earlier on. So if you attended the Wednesday Zoom session, you'll probably know some of the trades that I took. And then I'll look at some of the errors that I made. And then I'll finally look at some of the trades that I'm watching and what I'm anticipating for this coming week. Currently, I'm on cash. I'm sitting on cash. I don't have any position. So I'm watching markets anyway to stock some of the entries that I want and to look for good risk-reward ratios in the direction of the trend that I'm looking at. So I will first start off by looking at the trades that I took. So let me just share my screen. So yeah, so this is what I had. So the first trade that I took was an oil long. So last week, on Monday, I executed an oil long during the New York session, and I made money off this move all the way to the 52.5 mark, about $250. I also took some GU longs, and I made money off the move higher. So I executed a GU long at this. I executed a GU long. This market was moving like this. So I came in after the break of this level and I made about $160, $170 on that position. And finally, I made some money on Dow Jones. So I made some money also on this move as we were moving higher. On Monday, the markets opened. I knew that we had a pullback coming in and executed a long position expecting this move higher all the way to the $27,000 mark. So those are the three main trades that I took. I also made some money on Euro USD and Euro Yen, but about $200 on the combined trades, and I think the trades were highly correlated, so I won't look at them both. So I executed longs from this point, and I came out around this point about 100 pips, but on good position sizing, you can make about $200. So those are the three main trades that I took, and four main trades that I took and made money. Now the errors begin here. So basically, when I was looking for the pullback, the main idea behind looking for the pullback on the Dow Jones, which is US 30. Someone is actually asking about US 30 on the chat room. So I was looking for this pullback before this drop. The main idea behind this trade is this drop. If I missed money in this pullback, I wouldn't be really stressed out as missing money on this drop, because the whole idea in executing this pullback was for you to get this drop, because we expect this market to keep on dropping all the way to the 26,000, 24,000 mark. So there's a big drop coming in this market. And now I missed this move. What did I do? I executed a short position at around this point. And when the markets were moving higher, I fast closed off those positions. The markets actually never got to my stop losses because my stop losses were above this level. But I somehow panicked and I never wanted to lose money, and I closed off my positions before we got to this level. Then the markets started moving lower. So immediately I saw this yesterday when I came into the office at around 10, 11, executed again a short position. So exit a short position expecting this market to break this trend line and keep falling all the way to the $6,000 mark. But what did I do again? I did an error. Immediately the markets bounced off this position. I closed off my short positions. And the error that I did now, what I think is quite foolish, was I executed a long position, expecting that this market would at least come back to this level. What I expected was a stop hunt for many people who had placed their stops above this level. But turns out I was very, very wrong. You can see immediately markets tumbled and moved lower. So how am I looking at these markets for now? I'm trying to get an entry. And I think the only way I get an entry is if we get a retest of this level. So there are two things that can happen. Either we get a continuation and a move lower, at least to 26,350, which is this level. After we get to that level, I think we may get a pullback all the way to 26,600 again before the continuation, which will happen probably today before the end of the week session. Or rather, we could get a drop all the way to this level, 26,000. And when next week opens, we could get a pullback. So I'm trying to now see how I can execute a position. The best for me is at least I'm waiting for the pullback before jumping in. Jumping in at the current level, you're risking too much because you don't know where it will end, and there's a high chance you're almost getting closer to an end. So if you look at Fibonacci ratios, which I normally use to try and see when trends are changing and when markets are turning, you discover that you're almost getting to the 27, 22 extension on the 4-hour chart, which means, because you can see this clearly was a 78.6 pullback. Yeah, you can see 27. So yeah, clearly markets will get to the 26,000 mark. You may get to the 26,000 mark before getting a pullback, but you may also get a pullback when you get this continuation to the 26,000 mark. So that's what I'm watching for the one who was asking about the Dow Jones. Long term though, I'm really short. I'm expecting a big collapse on stock prices, about a 30-40% collapse on these things, because I don't see how the current economic environment supports high stock prices for now. So what we're looking at was, this was the first drop. So if you follow markets on a big picture perspective, this was the first drop that sent us lower. This was during the first wave of the coronavirus. Then you had this pullback, which was mainly catalyzed by the economic stimulus by the Feds. And now I think we're getting closer to another drop, a big drop, which will come in and it will send these markets lower. So first target, at least before the end of July and August, before the end of August, I mean, I'm looking for 24,000. So normally I try and look for the long-term direction, but I trade in and out because I don't believe in holding. Holding currently with such big pullbacks, you'll still lose money. You can imagine if you shorted this market at this point and you never exited at this point, then you gave back all the profits on this market, pulled back to this point. And psychologically, I don't think anyone can be able to hold with such deep pullbacks. So what I normally do is I come in and out of the markets, but in the direction of the trend. So what I'm looking for now is the $24,000 mark. Obviously, we can't get here before this week ends. So I'll try and look for an entry today. If I don't find one at least, and it gets to around 3:30 Kenyan time, I will just leave the markets and I'll wait for next week, because that's also another opportunity to trade. So probably we'll get this drop now, all the way to the $4,000 mark. That's the ultimate target that I'm looking for, the Dow Jones. Oil is another pair that I executed a position on. So this is oil. And on oil, we were actually looking for shorts. The idea was mainly derived by Caleb, so I only jumped into it by looking at the analysis. Because that's the good thing about trading, both of you. If the analysis makes sense, you can be able to jump into the trade and place your own targets and stop losses. But the main idea is mainly derived by your partner or something of the sort. So what you're looking for on oil, you never expected a break of 42.5. If you do your back testing, you'll discover that 42.5 is a very, very strong level. So what we expected was a drop from the 42.5, and you can see this is what happened. But the mistake we did again is we exited our trades before the stop losses were hit. So if you look at the 4-hour charts, you can discover that the markets started moving lower. So we had this first drop and we had this pullback. So I came in with this pullback, but I exited before the pullback was over. So I came in at around this hammer formation, but this move stopped me out. I placed a tight stop, which is something that I don't normally do. But this time I was not very keen. And when you do a foolish mistake like that on the market, will obviously kick you out of the game. So I lost some money also on this one, about $160. And I think that was it for the day. So if you look at the main ideas that I had, the ideas were good. The reason I lost money was, one, emotional trading, and two, being stupid by placing your stop losses so tight. So those are trading errors that most of you will make. If you're placing your stop loss, please make sure you place it at a point where you are wrong, not at a point where you think you will lose this amount. Because if you do that, you'll end up placing stops based on the pain threshold, and when you do that, markets will definitely take you out most of the time. So that's what I'm watching on oil. Also, I'll try and look for a pullback on the hourly chart before jumping on shorts. But I think most of these trades, we will look for them next week. I don't think there's much that will happen during today's session. So next week, we'll try and look at what will be happening on the charts. Then we'll try and capitalize on some of the opportunities that will be coming in. And on Monday, we'll share with you what we're watching on the market. So for now, we just have to absorb the mistakes that we did, go back and look at what we did, and maybe think about some other things that you can do for the weekend, celebrate what you have gotten, what you have lost, and finally do other things. So if I just show you my account as I sum up, so here you can see I'm up about, I started the week at 88,500, and you can see I'm up about $227 for the week. So that's not a bad thing, but starting at 88,500 and then pulling it all the way up there, it's not a bad thing. So, but if I never did the errors, I will have much more, because you can see I made some very good cash, but I lost it. But again, I think one of the things we still did very, very well, and I commend even Caleb for the mistakes we did, was we realized we were making mistakes very early and exited those positions. Most of you will tend to hold your mistakes for long, and you'll end up losing a lot of money, and that's the bad thing about trading. So catch your losses early, rule number one, and you can ride your winners when the winners appear. So that's it from me, guys. And is there any question from you guys? If there's no question from you guys, then I'll jump out and Caleb will finally clear.
So yeah, guys, that's it from us. As we said, losing begets losing, winning begets losing. I mean, winning begets winning. So when you're on a losing streak, learn to step out of the market, analyze if the problem is you. Mainly, most of the time, the problem is you. Like for me, I was jumping into trades. As Kenna said, I also had tight stop losses, and I was looking for a perfect entry. So there's no perfect entry in trading. So that's what I was looking at on oil. That's why I lost money on oil. I entered at 51.5, targeting $35 mark. As I said, Ken was talking about, we're looking at the Dow Jones about to really drop. In the long term, especially before elections, we're looking for that market to really drop. US oil, if you get another lockdown, if productions increase, just know that market is really going to tumble. That's what we're looking at. So the mistake was with us. This weekend, we're really sitting back to look at what mistake we did. I personally did a lot against my strategy, like looking for tops. I never look for tops according to my strategy. I use a lot of relative analysis. I was looking to trade most of the currencies are on the fifth wave. So if you look at Euro USD, fifth wave, GBP AUD finished the fifth wave to the downside. Now I'm looking for that market to really correct to the upside, as well as oil. Oil is also finishing the fifth wave. Also gold, mainly markets are really finishing their wave. So I'd rather let you know that to be out of the markets this week. If you're still trading, if you're profitable, continue riding the profitable trades. But next week we might see some correction, but be really conservative because we normally use something called the assumptive theory. Assumptive theory basically says that we assume the trend is correct until we are proven otherwise. So as long as we're trending in the direction of the trend, do not trend bet against it, or else you lose a lot of money. So that's it from us, guys. We don't have much to say. As Ken has told you, he's up about 200. Well, he was from 8,500 to 9,200, so up about $700. Personally, I'm down about $250, and it's part of the game, part of the market. So we're here to show you transparently our trades and always to show you how we perform. So just before I leave, I'll show you. If you want to learn how to trade like us, always you can purchase the book. It goes for $2.5. But if you want to get the live trades, we have our subscription, which goes for $3.5 a month. Also, we have our courses, which Ken showed you on Wednesday. And now we'll be seeing you guys next week. So always hit us up. You can visit us at our offices, but just let us know. And we can always advise you once you want to get into trading. There are a lot of people out there showing the wrong thing. So we just want to correct that. Learn trading the right way, which is the long-term way. Okay, so that's basically what I have for you guys, and we'll see you people on Monday. So have a good week, have a good weekend, enjoy the wins, embrace the losses. So part of the journey. So that's it from me, guys. See you soon.